Hello and welcome to the Friday wrap up for Bitcoin price action here on Landy's Crypto Corner. Today is September 6th, 2024, and we are, looking at Bitcoin as always. We can see that Bitcoin has broken down to a pretty important level here, and even wicked slightly through it and hit the 53,000 and under area in target one of distribution here. But Bitcoin's hanging out in the danger zone between that 55,850. So we did see the lower term time frame closures below there that kicked off a move down through the bottom side at 53.5, 53K, and I believe the low now is at like 52.5, 52.530. So we've seen a nice move down. We did get a run of this close open, and in fact, I think a slightly, it's almost equal closes here. What was the closing low? $54,029. Yesterday's closure was $53,950, so a lower low close. And in this case, could Bitcoin salvage itself here? It's a weekend, so we're in the Saturday candle. It's still Friday for me, but it is a weekend, so this can go one of two ways. It's either going to be dead over the weekend, or we're going to see things get volatile and have players in the game that are going to take advantage of the lower liquidity environment. But we'll look at a few other things that might give us some extra information. But essentially, if we do start seeing closes below this wick low at 53.5, I'm looking for yesterday's low essentially to get ran anywhere 53,000 top side of the target one of distribution to that wick low at 52.5. We see any price action start closing below there, even in lower term timeframes. We're looking to the $50,000 level here, and this wick is fair game at 49K into target two of distribution. And I would say that realistically, any closes below $53,000 that can that also break below the 52.5 on a daily, we're looking for this area to get filled out, at least at minimum target one. Fair game still on the wick low at 49K. We start to see closes below $49,000, and then we're looking to target two, which is around that 49 to 45. Now, the actual support line here is at 45.5, but that there's the longer term time frame chart that I'm going to direct you to in just a moment, where I'm going to call it 45 to 45.5, which is what this is. This is the bear market lower high close on the monthly from 2022. The wick high of that is at 48,240. I picked out $49,000 as this was an important zone that front run that area, as it was the ETF high over here. So in January, we saw the spike up into the 10th and into the 11th, and then a spike down into a major area, which is a monthly. Now we'll talk about some possible further downside in a little bit, but I did want to note for those of you that have been keeping close track of this like I have, the Bitcoin mining electrical cost is sitting at $43,000 even now. That hasn't changed. So now, if Bitcoin does trade back above the 55,850, it could have a chance to possibly set a daily low, at least for the Saturday candle, possibly into Sunday if it can hold this low side structure. So essentially, if Bitcoin can close Saturday and even Sunday above that wick low at 52,500 and try to remain in this danger zone at 53.5 on a closing basis, it has the potential to possibly try to turn around. Now, we're only looking at this as being viable even above like 55,850, 56K right here at the top side of the danger zone, bottom side of the risk zone. Then above there, I need to see closes come in. As it would stand for the Saturday candle, which is currently open, it would have to come in above 56,955, so $57,000, which was yesterday's high, or still today for me. But yesterday's candle high, the Friday candle high at $57,000. That would do it for the Saturday candle. Otherwise, we would need to see wherever the Saturday candle puts in a high, if it doesn't get above there, and then we would want to look for a closing low, slightly lower at around 56,150, 56,200, but still, again, above that 55,850 is where Bitcoin would have a chance. And that's even in lower term time frames, but you need to see closes above here that can hold. And from there, as I adjusted my chair, you can hear that because my microphone's all goofed up. But we've got the 58,400 level. This needs to be recovered to kind of get back in no man's land between 58.4 and $60,000 to 60,300 bottom side of the recovery zone, and then Bitcoin has a legit chance to recover, start working its way towards the 61 to 61.8 here, possibly up to 62.8 and then 63.8 and above there, 64K to 63.8 to 64K, and then above there that $65,000 high, which of course matches the first high that came in 2021 on a wick basis. And then of course above there we're looking essentially that 65.5 local resistance, which was this the second or the last downtrending lower high of the first big move down. The wick high came in above that 65.5 area. And then we've got that 67,272, which is the first major lower high of the range. Yes, we had lower highs above that, but this was in the context of a lower low, lower high structure. So 67,272, above there 68 to 70. And of course, this is the first lower high zone right here of the second big downtrend of the range. Second lower high is that top side of the recovery zone there at that 63.8. So we have some pretty clear criteria here on the daily. We don't need to beat it to death, but this is still just a breakdown. This is a break of this shorter term time frame uptrend, or the shorter term uptrend on lower term time frames, and of course the daily where it was a bit of an uptrend here. This is a trend break. We haven't seen a clear closing low yet, so it would be a lower low no matter what. And typically when you get a trend break, you look for wherever the low comes in, then you look for a lower high and then continuation. But this hasn't even shown that it's not. This hasn't even tried to put in a low really yet. At least it did try to hold areas here, but it didn't really try to put in a low yet. So whenever we see a low, we still need to be cognizant of lower high structure because we had the downtrend here with the trend break, lower high. Then we got the higher low structure in through here, and then higher high. But then we get a trend break right away. We do have to be aware of lower highs. So essentially we need to see $65,000 closed above on the daily and weekly time frame, of course, to actually start getting excited about price action to the upside. So other than that, it's sideways and down, or just sideways is the name of the game. And honestly, if bulls can just go sideways here in the danger zone and hold it, they'd be much better off. Otherwise, we're looking at that lower low of the third big downtrend here in the range. So your first, second, and third big downtrends here. That's likely to get tested, and this would be our fourth big downtrend most likely. I wouldn't be surprised to see a bounce coming into next week. Just anecdotally, the evidence isn't showing that yet, but if Bitcoin does hold this area, I wouldn't be surprised to see a low, that lower low set and then a bounce. But that's just anecdotal. Let's go ahead and turn on the Bollinger Bands here to get a measure for volatility. And we can see that we are picking up in volatility. We did get a closure outside of the lower second standard deviation here, but nothing too exciting yet. If we do see that lower second dropped at 53.5, again, we're looking down at target one, yesterday's low at 52.5 or so, and lower to run that, $53,000 to $50,000 range. And of course, that $49,000 wick would be fair game. I don't think we would get there in one shot unless we see like a major catalyst for people to push the market around with lower liquidity over the weekend. But, I wouldn't be surprised if things do go sideways, for it to try for a bounce early next week. And again, that's if it doesn't get continuation over the weekend to the downside. We'll keep track of that over the weekend, but nothing too crazy here. Back above the 55,850, Bitcoin's going to have to contend with the lower first volatility level. You'll often find that like the lower first and upper first in Bitcoin is trending. It kind of lines up with like a 5 EMA or 5 SMA in some cases. This is, the basis is a 20 simple, and this is the first, second, third standard deviations away from that, and then first, second, and third to the upside. So our lowers and our uppers there. Lower seconds typically provide for bounces unless you're seeing price close below. It's more aggressive expansion to the downside. Now, we're not seeing that reflected in the BBWP because of this big move down and then reversal right back to the top side of the upper band. So through the lower bands on expansion, back to the top side on expansion, or on compression, and then what's looking like re-expansion to the downside. But price looks indecisive on some higher term time frames. We'll get into that in a little bit here, and maybe even more on Monday. We might not have time for it today. But let's go ahead and look at momentum. Yeah, so it would behoove the bulls to actually hold over the weekend. 54,650 is going to be the momentum pivot. So again, that would look good to pop up at least within the danger zone here, but it doesn't mean much until we start seeing at minimum a 4 or 6 hour above that 55,850 they can hold, and try to get above around that. I'd call it what is this 56,500 lower lower first here. Then it would start to look a little bit better. We're probably looking at momentum shifting on the daily, but that's in the context of a trend breaking lower low. So it's nothing to get really excited about. Don't go cheering, but it might be good for a bounce. It's essentially what I'm trying to say here, and that could turn bounce can turn into something more. But in this case, doesn't look great. There's no sense in even listing out some of the other levels unless maybe if something crazy were to happen over the weekend. Actually, in this case, because there is a lot of fear in the markets at the moment, I might do like a really short video just to kind of recap my thoughts. In terms of like RSI, is there the potential for bullish divergence? Not really. Well, yeah, and you know what? On a closing basis, this was technically a closing lower low. And as long as it's sticking above, whatever this read would be over here, let's go ahead and take a look actually. Which one was this? Yeah, that was the spike down to 49 and the close at 54. So that is sitting at a 26. So this would need to at least maintain, would need to at least maintain a 27. Let's go ahead and take a look. Because it is lower low close and this is reading closes. So this would be interesting to see. Let's go ahead and pull the critical bear zone up to a 27 and just see what the number is here for confluence's sake. Yeah, no, that would be a lower low. So it's right around $49,000. So I guess if it closed above $49,000, as long as it closes above the wick low at $49,000, even if it spiked through it, it could still throw some bullish divergence on a closing basis. So, you know what? That's that would kind of fit with the narrative of washing out some of the swing longs that aren't paying attention, or think that keep levering up and have moved their entry up significantly into that target one of distribution between 50 and 53. So that'd be pretty interesting. Let's go ahead and fix this before I start screaming, "Why is my chart broken?" Because I will have forgotten that I adjusted things. So let's go ahead and do that. And nope, that's not what I wanted. Let's go ahead and look at, so this is technically all coming in the context of mean reversion now. We did get, this is very interesting. So if Bitcoin can hold 53.5, we might actually see this just go sideways and consolidate. So again, 53.5 is the number to hold for Bitcoin on a close. Can it swing it down lower? Maybe even get like a deviation close? Sure, 53,000 is there. Continuation on closes below 52.5 of the move. So yeah, sorry, thinking out loud and explaining at the same time here. Let's go ahead and look at so we said 54,650 is the momentum pivot. Bitcoin's trading by $800 below there right now. And I would, let's see what the weekly's at, because this is going to be interesting for the weekly. Weekly momentum is down, and this looks like continuation on the weekly, but it is the lower second. So let's go ahead and get rid of support and resistance zones. Let's go ahead and turn on, we'll do that in just a second, and then we're going to wrap. All right, so this is getting expansion on the weekly to the downside, and that's not a good thing for the bulls, to be quite honest. Upon last week's closure, the prior week's closure into this week, we saw the close below the lower first. that begets a tick up in volatility, also reflected in the bands here. If Bitcoin closes the weekly candle below the lower second at 53,741, it's gonna look like more aggressive expansion to the downside at minimum to retest the lows or somewhere around them at minimum at that 49 to 53, and possibly lower into our $43,000 area. So 53 to 49. And then that opens up the next big area, and he closes below there, especially on the dailies. And then if that leads into any higher term time frames, we're looking at mining electrical costs getting spiked, more likely than not at around $43,000. But if Bitcoin, this is the setup, so you want to see Bitcoin closing the weekly candle above around 53,800. I'm going to call it. I'll give it some room. Around 53.8 is kind of where I would want to see. 54K would be even better as we could potentially see lower term time frame bounces or trends form to the upside. But in this case, anywhere below the lower first, I'm not really interested in further upside, and that's now at 58,300. And to put that in perspective on the daily, I call it 58.4, but 58.3, it's kind of a front run of this 58.3 close open right here. That's 55.850. This is 58.3. That is the 58.267. This is the lower low close open of the first move down that spiked $56,500. So, that would, living below that low on a closing basis on the daily obviously isn't going to look good if it's confluent with that lower first standard deviation as it stands right now on the weekly. It does not look pretty. We've hit some key levels to the downside, but nothing too interesting. I've seen a lot of this, like a lot of these fibs being pulled, and you don't need to pull that. Realistically, if you're going to pull a fib, pull this one, right? You got to pull the high of this move, the 70,000 or 70. Yeah, that's a $70,000 wick high to the low at 49. And you can look at it in the context of that and closing below the 618, going in and spiking into the 786, yada, yada, yada. It just looks like continuation, just looks like $50,000 and the wick low are going to be in play. And if you were to pull the range in this way, you see that the close open on the weekly was, essentially a breach of that 618 of this entire range and moved down. It's trying to balance itself on the weekly around this 786, which is the lower second. So we have confluence with fibs and volatility in this case. Closes below the lower second, probably going to go to the 888 in this case, and more than likely go lower to test the lows. The low wick there on high volume, or that was a high volume low wick, I should say. So just keep that in mind. There's other fibs we can pull. I know that we discussed a little bit of it previously. Maybe on Monday we'll follow up with some of that. More importantly, I want to see where the momentum pivot is on the weekly as it enters the bearish control zone of a regular Stoke. In this case, it's 58.4. It's our key level. The weekly level is, our key level on the daily, between 55.850 and 58.4. So there you go. It's got to close one level higher. It does have the potential to try to bounce in lower term timeframes, but any kind of bounces that fail to change any kind of lower term timeframe trend are more than likely just going to lead to either sideways or resumption of the downtrend or continuation. So just to kind of point out, the confluence here is on the daily with that weekly momentum pivot. The top side of the risk zone here is that 58.4 right here. So that's your confluence with the weekly pivot. And of course, that would look really good to close back above there on the daily as a three candle structure, right now, if it were to do that on like Saturday. But again, weekends, it's either going to have no liquidity until CME open or shortly before CME open on Sunday, or it's going to be, volatile and people are taking advantage of the lower liquidity environment. In this case, I did want to check on open interest in the markets. We did see this get down to around 14.7 billion in open interest, and we saw this spike about 15.37. while this wick went a lot lower to grab a lot of extra liquidity at that $49,000. It's still a little bit more open interest in the market than I would like to see. Um, yeah, because the same levels that it was hitting, that it's just running into now in that $53,000 area over here, is got a little gap down, and you see that this was hit the last time. But yeah, I want to, we could see another flush of like 700 million to $1 billion out of the market if it does move down. Um, Maybe even more, depending on kind of how things are going. But take a look at funding rates, and that'll give us a good idea. Yeah, funding's all negative. So we do have some shorts building up. The only way I think they get washed out is anywhere above 58,400. I think they're going to start getting scared, closing their positions, likely getting stops hit, and maybe even for those lower term time frame traders who like to lever up with no stop, get wiped out via liquidation. So you all have a wonderful weekend. You have a wonderful morning, afternoon, and evening, no matter where you're in the world. Please trade safe, and of course, as always, stay safe. I'll have more for you on Monday. Keep an eye out for a Monday show as well. I'm gonna do what I did this past Monday, and we are gonna have a pitch me your project portion at the end of the show, and yeah, it should be fun. And I'll talk to you next week. Make sure you have a great weekend. Stay safe. All right, take care. Landy out.